All right, VV Nation, Ryan here. Welcome to the channel. Now tonight we're going to do something a little bit differently. Normally I go over industries or hot stocks that you might be interested in or have, great upside potential. But in tonight's video, I'm going to take a different approach and we are going to focus on protecting profits. Now, as the market bottomed out and has been a pretty strong rally so far this month, going into the holidays, looks like we are shaping up for a pretty nice Santa rally. I know a lot of people might be up in their positions right now, so I just wanted to utilize the power of the VectorVest 7 tool, focus on a couple different things, one being market timing itself, from a market aspect, when is a good time to take profits, and from individual stocks. So I'm going to give you some pointers utilizing the power of the VectorVest 7 system to keep you on the right side of the market. Because let's be honest, if you're not protecting your profits, you're literally just wasting your time in the market. So if this is something that you're interested in, stick around and let's get started. So right behind me, I do have the homepage of the VectorVest 7 software. Now here at VectorVest, we focus on market timing. So that's where I'm going to start in tonight's video. Now, as far as market timing, we're seeing the major indices mixed as of this morning here. The Dow Jones is the big winner today, up, 0.8%. Even the VectorVest Composite or VVC also to the upside at 0.1%. Now the gauge here is 2 ticks into the green, therefore VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. Because the gauge is green, we know that the color guard is continuing to have green lights appear in it, thus the market is moving up. Now, we never want to go against the market, nor do we want to be greedy. So there are going to be a couple points that I want to show you in the VectorVest 7 software to keep you on the right side as this market continues to rally. Now, this being said, some of the early warning signs that you'll see if the market starts to lose momentum here is going to be found in the trend column. Now, this first component here, which is an up, refers to our primary wave. Now, the primary wave is our fastest moving market timing signal and simply looks at price action of the VectorVest Composite here compared to 5 days ago. So as long as the market keeps trending up from where it was 5 days ago, the primary wave will remain up. Now, in addition to that, the second thing we're going to keep our eye on and go into detail in this video is the MTI. Now, I know a lot of you may be subscribers. Some of you may never have utilized the VectorVest 7 system before. Now, the MTI here is a great indicator for bottom fishing, but also a great indicator to know when is a good time to consider taking profits. Now, if you've been with us for a while here, the MTI likes to bottom out around 0.6, which it did this last time. We've had a strong rally to follow suit. Now, because of this rally, the MTI is now at 1.24. So now where does the MTI like to get top heavy? That's the question I'm going to answer today. The MTI historically gets toppy around 1.5 to 1.6. Now, that doesn't mean as soon as the MTI gets up to 1.5 to sell all of your stocks. There's other indicators you'd like to see, but it's just letting us know that the market's getting a little bit on the overextended side and is probably a good time to thinking about either hedging our portfolio or protecting our bullish profits that we've made in this most recent rally. So now I'm going to jump over to the market timing graph so that way we can get a better visual of this information and I can explain it in better detail. All right, here's our market timing graph. The candlesticks here represents our VVC or VectorVest Composite. Again, our VectorVest Composite is the over 9,000 stocks we're currently tracking. We just feel that it gives you a much better broad representation of the market itself than just one of the regular indexes such as SPX or the NASDAQ. And then down below, we do have our MTI here. You'll notice I have a green line and a red line here. The green line is where historically it looks for a bottom at 0.6. While red is when it typically gets top heavy around 1.5. You can see over the past year here, if I just use a freehand line, that playing to the downside when the MTI is around this red line or at these historically overextended levels, while playing to the upside or entering bullish positions while it's historically down at these 0.6 levels, works out very well. Now, most recently, you can see if I zoom into a 3-month time span, the MTI was below this 0.6 level, showing that the market was greatly oversold and looking for a bottom. A lot of the things that we look for when it comes to bottom fishing are also the same things that we look for when it comes to taking profit. We just look for the opposite effect. So instead of looking for green lights or primary wave is up, we're looking for red lights or primary wave downs. So just to reiterate that, if I change this to our green light buyer here, and let's zoom into a 1-month time span, you'll notice these green lights started appearing back on the 13th of November, showing that the market has been moving to the upside here. Green lights still appearing this week, even as of yesterday. Even the last 2 trading days, still getting green lights, showing this market moving to the upside still. And look at the MTI here at 1.25. So this being said, with the market still trending to the upside and MTI not quite at that historically oversold level, not quite at that historically high level at 1.5, we do have some room for the upside here for the Santa rally to continue. Now, a few things to look for as far as taking profits when the market does get a little overextended is the primary wave here. This is going to be your first warning sign. Currently, you can see that we are in an up as of yesterday. We were in a down here, but we didn't get any follow through the next day. So you always want to make sure we're getting follow through, whether you're being bullish or bearish. That way you're not subject to general market volatility. So the primary wave is still up right now. The MTI is climbing. So let's take a look at the market from a more technical standpoint. Change this to our enhanced pro trader timing layout. This looks at the market from more of a technical standpoint, and this does coincide with our DEW. Now, our DEW timing signal, mostly used by swing traders here, and personally one of my favorite signals to play the ups and downs of the market. This preliminary up signal was given on November 3rd. We use a 30-day weighted moving average, so the price of the VectorVest composite had to cross above that 30-day weighted moving average, and the DPO, or detrended price oscillator, had to go into positive territory. Now, we have been an up signal ever since, so if the market does start losing momentum here, price action would converge closer to this 30-day weighted moving average. In order to get a down signal, price action would have to cross below that 30-day weighted moving average and DPO into positive territory. However, we're seeing DPO still continuing to rise here. In addition, look at the MACD down below. This doesn't generate signals for the DEW, but just gives us a sense of bullish and bearish trends here. We can see the MACD line crossed above that signal line here at the beginning of the month. However, we are seeing the histogram bar starting to shrink here, and that MACD line converge closer to that signal line, showing that the momentum is starting to wane, and that's reflecting in the price action here as it's starting to consolidate or move sideways over the past trading week. Now that we've gone over market timing and what to look for as far as signals showing us that this market is potentially changing directions, let's jump over to an ETF that I want to look at. All right, I don't know which stocks that you currently own, but right behind me, I do have the Qs up right now. This represents 100 of the biggest stocks in the market right now, the NASDAQ 100. Pretty tech heavy, so I know a lot of people watching this video will own these stocks. So this is how they're moving collectively. We can see here these stocks as a group have been on a tear over the last 1 month here. Nice rally forming. However, if we look at these exponential moving averages here, we do have a 3-day and an 8-day exponential moving average. We are seeing that they are starting to converge closer together, showing that momentum to the upside is waning right now. In addition, look at price action just broke below that 8-day exponential moving average. Now down below, I do have a 20-day exponential moving average here, just to give it a little bit more breathing room for this rally. So if you're more of an active trader, if this 3 crosses below the 8, that's a good time to potentially look at when protecting profits if you're holding positions in the NASDAQ 100. However, if you want a little bit more breathing room, you do have the 20-day exponential moving average here coming in just above $381. All right, VV Nation, I hope you enjoyed tonight's presentation. We do have a saying here, and that's called keep your eye on the MTI. Now, if you forget everything else in this video, please just remember the MTI historically gets top heavy around 1.5. And as we approach those levels, you do want to think more about getting defensive in your portfolio. Now, in addition to that, I did jump into the QQQ graph showing you that the 3-day is converging closer to that 8-day exponential moving average, that these heavy tech positions might be starting to roll over, and just take note of that going forward. Now, however, with green lights in the color guard right now still appearing, I am bullish on the market and see that there is still potential to the upside when it comes to the Santa rally. However, don't forget about that MTI, and as that MTI approaches 1.5 level, don't miss out on protecting your profits. Hey, we are having a free stock market masterclass in Dallas on December 2nd. Register at VectorVest.com/Dallas. Space is limited, so reserve your spot today. Now, this class will not be recorded, so you must show up to get all the benefits of this class. Now, those benefits include learning about a trading system that is 3 times the performance of fixed income investing. Not only will you get that new strategy that outperforms fixed income, but you will also hear more about the near perfect indicator and how to use it. Now, we will talk about how to find stocks that align to your investment goals, and we will show you how to effectively manage your portfolio. Now, this event is perfect for those new to the market all the way up to the seasoned investor. Now, take this pivotal step and attend this amazing masterclass event to take your investing to the next tier of financial freedom. We'll see you there.